Hey guys, in this video, I'm going to be trading Ethereum. This one is going to go through some intermediate level stuff. So I'm going to tell you how to actually read a trading screen, how to read a chart, just going to go through some very simple technical analysis techniques that you might want to use, and then how to actually go through and place a market order and a limit order on a trading system. I'll be using Binance for this tutorial, not to say that Binance is better or worse than others, but it's going to be the same no matter what pro service you use. You'll get a chart and some trading options as well. I will link Binance in the description if you want to click on there, go through, sign up for an account and follow along with me. If you're looking for a beginner's method on how to buy Ethereum, I have videos on that as well, so you can check those out in the description, along with all the other information that you need to know in the description as well. But let's come through to the trading screen for Binance. So you can click that link in the description, you'll come through to this homepage. Then what you need to do after you sign up for an account is come up to this trade screen. This is the intermediate or advanced way of doing it. We can come down to advanced. I wouldn't click on classic. That's just an old version of the system. So we can go through to advanced here, and then we come into the trading screen. And if you're not using Binance, if you're using something like Coinbase Pro, then you're going to have a similar layout. So they're not exactly the same, but the layout will be similar overall. But the first thing we're going to do is just look at the chart and how to read it. So on Binance, you have a few different options for the chart. You can have original, and that takes away all of the technical analysis drawings for you, or you can have trading view. So I want to look at trading view first. The first thing you might want to do with the chart is get the time scale correct. So we're on a 4 hour right now, but you can choose maybe 1 day. You can go over to 1 week. Now, this will be the time scale of each of these candles. So we've got this graph on a candlestick graph right now. So each candle represents a period of time. So let's just change it to 1 day. So each candlestick is 1 day of trading. If it's red, that means that day was down. And if it's green, that means that that day's price movement was up. So essentially the bottom of the candlestick will be the lowest price traded, and then up at the top it will finish. This was an up day, so we'll definitely have an up movement here. It will be in green, and that is where the day finished. So the colored in bit is where the day started and finished in terms of trades. You can see there's some small lines. That's an intraday price movement. So actually during this day the price moved way up, but then it finished a little bit below that. So the colored in, or the thick part of the graph, is where the day started and finished in terms of the price. Next, we want to go ahead and actually choose a currency pair. So when you trade cryptocurrencies or any currencies, you trade in a pair. So I've got Bitcoin against the US dollar tether. The US dollar tether is a cryptocurrency that is tethered or linked to the US dollar. So for every $1 US, there is $1 US tether. And this just gives you a very easy way to essentially trade cryptocurrencies against the US dollar. So everything will be against that. You can see when you choose fiat, you're actually trading against the US dollar tether. You can go into your account, change some US dollars and deposit US dollars into US dollar tether, but I can actually change Ethereum because that's the one we're doing. So we come down to ETH against USDT, which is Ethereum against the US dollar tether, and this will be the price chart for us. If you want to go ahead and trade Bitcoin against Ethereum, you can do that as well. So you come up to here and you've actually got Bitcoin as one of the main assets right here. So you choose BTC and then you search for ETH, which is Ethereum, and you can see it right here. So I'm just going to cancel that. ETH right here, ETH against BTC. So now we are trading Ethereum against Bitcoin. So if you have some Bitcoin on account and you want to trade them into Ethereum, this is how you would do it. The system now knows that you are actually selling Bitcoin and trying to buy Ethereum. But let's just go back and we will trade Ethereum against the US dollar tether, so fiat, and then ETH, and then we'll choose Ethereum against USDT. Now we will be buying Ethereum and selling US dollar tether. The way that you trade currency pairs is that you sell one to buy another. You, of course, can't use the same cryptocurrency to sell and buy because it's exactly the same thing. But when you buy one currency and sell another, what you're essentially saying is that you think the currency that you're buying will outperform the currency that you're selling. They may even both go up in value, which is obviously good if you hold both, but they're not going to go up exactly the same. And so the one that goes up more than the other is the one that you want to be in, because you will, on a net basis, have a better return. So that is why people trade currency pairs and often sell one currency that they think won't perform as well as the currency that they're selling to buy the other one. Next, we'll have a look at the order book right here. So we are actually trading the spot market right now, and that is the market that you should trade. When you go into cross, 3x and 10x, This is margin-based trading. It is essentially borrowing money from Binance. If you have maybe $1,000 on account, you can actually get some credit from Binance to go and trade bigger trades. I would not recommend you doing that at all. Cryptocurrencies are definitely risky enough already. So we're going to trade the spot market right here. And this is the order book. So this is essentially a book of all the traders that have trades in the system right now. These in green right here are buyers or bidders. So they have their orders in the market and they are trying to buy stock at a certain price. And you can see it floating around here, but generally the price is 1,288 point and then something, and it's going to float around. And all of these up here are sellers, or they're on the offer, as we'd say in the UK, or they are on the ask, as you'd say in the States. And these are obviously higher than the bidders. So these are all people trying to buy stock cheaper than the market price, and these are people trying to sell stock more expensive than the market price. And when a bidder and someone offering stock actually match up, that is when a trade occurs, and that is the price in the middle right here. So if you want to go and put an order in the system, you don't have to use this price. You can come in at a lower price and then hope that the market actually moves down there. And if it does come to your price, then you will be filled if you're a buyer and you will buy stock at that certain price. We'll get on to placing an order in a second though. We're going to come through to the chart and I'm just going to explain a few different, very simple technical analysis techniques that you can use on the chart. First thing I want to explain is simple moving averages. These simply take an average of the closing price of the cryptocurrency on a given period of days. And on this one already, so if you come into Binance, you will actually get these. So I have a 10-day, a 25-day, and a 99-day moving average. So obviously the shorter the average, the closer it will follow the actual closing price of the cryptocurrency. The longer the average, it will obviously be smoothed out a lot. So we can see actually in yellow, we have the 10-day, in purple right here, we have the 25-day, and then in red, we have the 99-day. Now, simple moving averages don't really tell you a lot, but they just give you a smoothed outline of the chart's movements. And people use these as a very rough basis of lines of support and resistance. So when the price actually moves, if you're in a downtrend, then you will look for certain moving averages for maybe the price to come to and then maybe bounce off. And if it bounces off, that's a good sign. And if it breaks through those moving averages, then people would assume maybe it's going to actually go lower and start a downtrend. You can come in and change these. So I'm just going to click on this one, the format button on the 10-day moving average. You can change the length of the moving average. So it will calculate this for you. Change that to anything you want. You can change it to a 30-day. I'm happy with 10-day though. And then you can change the style. So you can change the thickness of the graph and also the color of it as well. So you can do that there, and then you can get rid of them as well just by pressing X. And then on Binance anyway, you can very easily add them in, coming up to the technical indicator box and then just putting in moving average, and it should have them for you. And then you can add them and change them just like you saw me do right now. Next, we'll come to Fibonacci, and this is a way that you can plot lines of support and resistance on the chart. And it's a mathematical equation that essentially gives you lines and areas that you would expect the chart to meet resistance and support given the price movements. Fibonacci plots these price movements based on a low price and a high price in a given trend, and the time scale that you use here is really up to you, but you should notice you really are at the start of the trend and then obviously the current price, and it should give you some very rough guides as to how prices usually move. Now, it can't predict what's going to happen, so people just use this as a guide, but we'll come over to the Fibonacci. So we'll click on this twice, come down to Fib retracement right here. We're going to click on this one. Then I'm going to go and click on the high of this current price movement right here, and I'm just going to plot the end or the start of it right here. So I think that was really the start of the move. So I'll plot that like that, and we can see all of these different colored lines. These are the different areas of retracements and support, and each of these lines comes in at different percentages away from the high and the low. It looks like Ethereum for now anyway has had an absolutely massive run up, but it is meeting some resistance and some selling pressure right now. So we can look at these Fibonacci retracement levels to see what are some levels that the stock may find support at, or if they do break through, then it could mean that the stock is going lower or the crypto is going lower. So we can see this blue line right here is a level that we should look at as a level of support, and really look at this level and say, what is going to happen if the cryptocurrency moves lower through that level? That could be a bad sign that it's going to move lower further. And some people would say that if it does bounce off this line, that is actually a positive sign and is continuing the uptrend. It would bounce off that support and then move higher further still. Nothing can predict the future, of course. These are just technical analysis. Fundamental is needed as well. But these just may give you some levels that you may want to put some orders in at. So let's get into actually placing some orders. The first type of order is a market order. So let's come over here and just choose market. Now, with a market order, you do not choose the price that you trade at. You only choose the amount of the cryptocurrency that you want to buy. So you can come right here and see the price. It just says market. You have absolutely no control of the price. So you're not putting an order in the system. You're literally saying to Binance, hey, I want to buy this many Ethereum and just go out and do it for me. And you don't choose that at all. So you can come and say, right, I want 2 Ethereum like this. That's absolutely fine. You can go ahead and do that. You press buy and that will pretty much happen instantly. Binance will go ahead and just lift all of the offers on the book for you. This is very easy and it's very quick. It will come down to total as well. This is good. So you can actually choose the total amount that you want to spend. So rather than the amount, which is I want to buy, 0.05 or something Ethereum, you can say, I actually want to spend, because this is in US dollar tether, you know how much you're spending. I want to spend 500 USD, and then it will go through and essentially buy that much worth of Ethereum, but you don't know the price. You can also come down and use this slider bar. So if you have maybe $1,000 on account or 1,000 USDT on account, you can go ahead and buy 50% of what you hold, and then that will go ahead and buy it for you. This is a really quick way of buying. It's very simple and it gets the job done, but you have absolutely no control of the price. And usually with a market order, if you're buying quite a lot, you'll probably just lift a lot of offers, start paying up and get a bad deal and a bad price. It's good in some occasions, but really what most people do is a limit order. With a limit order, you choose everything. You choose the amount that you want to buy and the price of the asset. So you can choose how much you want to pay. So you can see on this occasion, it actually gives us a amount that we can pay. So right now the market is 1,224. I can say that I want to pay 1,200 like this. Now this is, let's just put a 50 in there. This is actually below the current market price. So the current market price is 12.18 and you want to pay 1,200. So you're not going to actually go through and trade right now, but you can put your order in and Binance can have that order in for you. And if the market price does come down, you will trade at that price. So you can put the amount in. I want to buy 1 Ethereum, and you can see what happens here is it just uses the amount of Ethereum that you want to buy, times it by the price, and that is your total amount. If I doubled the Ethereum, the total USDT that I would need would also double. Put 2 in there, goes up to 24. So that is really a simple way of how to do it. You can choose the exact price you want to pay, the amount of Ethereum that you want to buy, and it will tell you how much you need to actually go ahead with that trade. Now, what will happen if you put this trade onto your account? It can't trade right now. I'm just going to change this down to 1,100 because the price is moving down. So what will happen is that Binance will work that order for you, and right down here, you can see open orders. That will be in here. That is an order that Binance is working for you, but isn't traded right now. If the price moves down and we can buy those, then that will be bought for us right away. Binance will do that and it will come straight into our order history and we can see that trade and we will actually have that stock. So with a limit order, you may not buy straight away, but you do have control of the price. And if the market does move down to your level, you will buy at the level that you chose. Once you've gone through and actually traded, you will have all your order history down here. But if you are using Binance, you can come up to your wallet, go to overview, and that will be placed right in there for you. You can go and see it, and you can see it as part of your portfolio as well. If you're using a different system like Coinbase Pro, there will be options as well. That will just go straight into your trading wallet as well. That's really the basics of trading Ethereum against other cryptos and inputting market and limit orders. If it was useful, please subscribe for way more crypto content and news, and I'll see you in the next one.